Hello everyone, this is Dwayne Kilty with part 2 of job order costing. Same learning objectives as the previous lecture. We're going to focus on job order costing. Job order costing differs from process costing in that it deals with unique products and services such as a construction project, something that's defined, something you can trace costs to. Process costing is homogeneous projects and services such as cans of soft drinks, where you can't trace a individual cost to a can of Coke, but you can trace the cost to a batch of Coke. Process costing, the average unit cost is the total cost divided by the total units produced. Costs are traced to the process and then divided by the units produced. Manufacturing cost categories, we looked at this the last time. Assigning manufacturing costs to jobs, direct materials, there's some sort of a materials requisition form, labor time tickets, charge labor to jobs, and there's a predetermined over rate that applies manufacturing overhead. Here's a materials requisition form for lumber for a project, a labor time ticket, manufacturing overheads is applied to jobs that are in process. An allocation base such as direct labor hours, total direct labor dollars, or machine hours is used to assign manufacturing overhead to individual jobs. We use an allocation base because it's impossible or difficult to trace overhead costs to particular jobs. Manufacturing overhead consists of many different items, and actual overhead may not be known until after the end of the period. The predetermined overhead rate is used to apply overhead to jobs is determined before the period begins. We estimate the total manufacturing overhead cost and the total of whatever the cost driver is, and then we calculate our rate. Because flipping houses is a labor-intensive business, we will use direct labor hours as the overhead allocation base. You've estimated the total manufacturing overhead cost for the year to be $150,000, and direct labor hours are estimated to be $10,000. So $15 per direct labor hour is going to be the predetermined overhead rate. Predetermined overhead rate times actual direct labor hours of job 27 gives us $300 applied to job 27. Predetermined overhead rate times actual direct labor hours of job 28, we apply $240. Here is the job cost sheet that shows direct materials, direct labor, and manufacturing overhead. Most likely it's going to be automated. Here is how the costs flow in job order costing. Make sure you understand that. Record the purchase and issue of materials. Assume the house flipping company has two projects, jobs 27 and 8. Following information is available. The purchase price of the properties for the two projects were $250,000 and $200,000. The company started the period with $10,000 of raw materials inventory, and they completed two completed but unsold projects. Took me a while to get that out. In finished goods inventory, it cost us $600,000. Company purchased 25,000 materials, 15,000 was used for job 27, 10,000 for job 28, and other minor materials were $500. We see the journal entries, make sure you trace them through and understand how they flow. Labor, same thing, make sure you understand why the entries are what they are for the labor and that you could recreate them. And same for manufacturing overhead. In addition to indirect materials and indirect labor, the company incurs other manufacturing overhead costs, including property taxes owed but not yet paid of $1,700, expired insurance premiums for project sites, depreciation on construction tools and equipment. Those are all recorded in manufacturing overhead as charges, debits, and then our $4,500 is credited to manufacturing overhead based on the overhead rate. Here is the transfer to finished goods and cost of goods sold. Again, make sure that you understand how to make those entries. Job 27 is completed. It moves out of work in process inventory into finished goods inventory. It's still on the balance sheet. It's sold. It moves from the balance sheet to the income statement as cost of goods sold. And the price that the buyer paid is sales revenue. We record non-manufacturing costs and selling and administrative expenses, commissions, advertising, staging, administrative expense. Disposing of over and under applied. The most common method of disposing of the balance of the manufacturing overhead is to make a direct adjustment to cost of goods sold. Over applied manufacturing overhead has a credit balance and it decreases cost of goods sold. Under applied manufacturing overhead has a debit balance and it increases cost of goods sold. Here are the journal entries and the cost flow. Again, make sure you understand. And again, here is a cost of goods manufactured report. Make sure you can trace from the summary of cost flows to this report. Here's the income statement. Again, make sure you can trace all the way through. Job order costing is used also in professional service firms like accounting and law firms and others. Because service firms tend to be labor intensive, the primary driver used to assign costs is billable hours. In a service firm, service firms incur many other indirect costs that cannot be traced to specific clients or accounts. And so you have the same issue with overhead.